Welcome back. It's time now for our daily feature, Need to Know, your opportunity to ask any questions about money matters. And here's the good news. We get our team of experts to answer them for you. Our question today comes via email from Henry, and he wanted to know whether we should regulate the gap between the wages of the highest paid executives and low-wage workers. ENCA resident economist Trudy Makhaya answered this question.
There are multiple perspectives on the question as to whether society should regulate the gap between the wages of the highly paid executives and low-wage workers. On one hand, the difference might simply reflect the fact that there are differences in productivity and skill levels between employees within a company. However, there's also lots of evidence to suggest that executives have a lot of leeway in determining their own wages without much oversight and without much empirical evidence, bringing into question the basis for the large differentials we see between the wages of highly employed executives and low-skilled workers. It's important to bear in mind that there are other initiatives that can be taken to flatten the wage gap, such as introducing a minimum wage, subsidizing low-paid workers, or taxing highly paid executives. Measures to increase the transparency of the ratio, for instance, simply reporting what that ratio between high and low-skilled workers is, might also give information for boards and other stakeholders to set wages appropriately.
It's time now for a look at the markets, and we start in the United States, where markets extended their record gains today as investors watched corporate earnings and speculated that the U.S. economy is strong enough to withstand a global economic slowdown. In Europe, markets there also had a good day, shrugging off the news that more than 2 million Catalans had voted overwhelmingly in favor of independence from Spain. These markets trading in positive territory, riding on good global market tailwinds. Here at home, the JSE closed at 7-week highs today, backed by a strong recovery in recently oversold mining shares. The gains were across the board, and some of the day's best gainers included Lonmin, which gained over 7% on the day on a flat platinum price and despite reporting a loss for the 2014 financial year. Rand-hedged stocks like SAB Miller and British American Tobacco were also among the prime drivers. Let's look at the commodities now. Gold resumed its retreat in New York, falling for the 8th time in 9 sessions on signs of waning investor demand. Holdings in global exchange-traded products backed by gold fell 1.4% last week, the biggest drop in 2014. On the currency market, the rands held steady on talk of stimulus measures in China, and has also benefited from a stronger Russian ruble. And that's it for today's edition of ENCA Moneyline. Remember, you can send us any questions or comments via email. The email address is moneyline@enca.com. Tweet us using the handle @ENCA News, hashtagging ENCA Moneyline. Until tomorrow night, good night.